Good morning, good afternoon, good evening, and welcome to Martin Lucas Investor. Did anybody catch my trade then? Did anyone just catch my trade? I just made a trade live on the show. I sold all of my XRP for a 2% loss. Banking the tax loss, I bought it back slightly lower, improved my position, and there you go. We were down 2.5% on my my Ethereum. Bought it back slightly lower, got a tax loss, and improved my position. This is a new strategy we learned about yesterday. Did you see that happen on the show? Did anybody clip that? Fantastic. So there you go. You can win 100 Luca coins if you saw that happen. You can claim that right now. So there we go. Just improved my Ethereum position, bought it back. I've now got myself more buying power on that performance. So I'm now going to use that money and I'm going to go and buy the S&P 500. There we go. So let's do this now. Let's go over to VU. How do you do? And let's do this now. We've got the ECB coming up. So what I'm going to do this time is use a limit order, buy, sell, beg your pardon, buy, yes, buy, limit order 603.40, yeah, 603.40, limit order 603, I'm going to mark it at 603.66, I want to, 70 actually, 603.70, I want to put it there, and I can buy, two? I can buy one. I can buy one at that level. Okay, continue, review, go. Let's see if it goes through. There we go, 603.61. You got that. I'm now going to use the cash buy as well. So we're going to go $400. Review, because I can't do the limit order. It's not enough. 603.52. That's okay. Done with that. There you go. I'm buying back the S&P. That was by making money on a tax loss on my Ethereum. Okay, there you go. Live trades there. Did you catch all of that? If you shared that on Discord, you would have. You can win 100 Luca coins for sharing that. Okay, that's my live trade. Okay, there we go. I've improved my position. I'm getting the S&P on the way down. I've sold for a tax loss. I can now use that. If I go into crypto, if I go to profit and loss, there you go, 12,000 down this year. I can use that, even though I bought back and improved my position. I can use that so I won't pay any tax this year. It's a new strategy we only learned about yesterday. All right, so, okay, great. If you can do that in the US, it's ridiculous. I think it should be illegal, but it's not. All right, it's crazy. Right then, right. Let's get ready for the live show. We've got the ECB rate decision coming up in a minute. We're going to cover it live, so stand by for that. If you've just tuned in, good morning to all of you. Tap the like button. Consider subscribing. Oh, excuse me, got itchy nose. Consider subscribing and be part of the family. Let me go to live Q&A. We are waiting for the ECB event to begin. If you want to join me and catch all my trades 24/7, 7 days a week, you can join me over there on Discord. It's pinned to the top. There it is. I'll onboard you live on the show. Send me a friend request. It takes 8 minutes to get through. You need to watch our little introduction video. Tells you all the security issues you need to take care of and answer a couple of questions, and we'll let you in. You can see all my trades. Talk to me live 24/7. Literally direct message me. Okay. There is the Discord and there is the YouTube membership. I put the same thing on YouTube Electrum. And also, if you want the newsletter, which is 50% off, there it is in the chat for you right there, where we're giving 3 away today, 50% off because the training course comes out this week. All right. Okay, let's see if we can do it again. Let's see if we can do it again. So we're slightly down on XRP. You got to go at least 2% to make it worthwhile with the spread. But my spread now is 0.15. So my cost of selling is virtually nothing. So I can sell at any point. Every 2% I'll sell, take another tax loss, and buy it back at the same price. That's what I'm going to do on crypto. It's the only thing you can do it on. XRP and Ethereum. You can't do it on all crypto. So you got to go and check which crypto you can do it on. You can't do it on stocks. You got to wait 30 days. It's a loophole they're going to sew up. But for now, it exists, and I'm going to take advantage of it until they sew it up. It should be illegal. It's so lucrative and beneficial. It's crazy. So you can end up buying the bottom of your favorite crypto. Remember though, if it suddenly shoots up and you miss it, that's the downside. Now you waste it all. But if you think that that it's going to keep going down for a while, it's okay. It's okay. Then you could buy it back, and then it doesn't matter, does it? So anyway, I'm just using that money to buy the S&P on the way down. So I'm going to keep my eye very closely today on my crypto positions. All right. Okay. So we've got, how long have we got now? We've got just half an hour before the ECB. We know what the ECB decision was. They was going to cut rates, but Europe, Britain, Australia, China, just about everywhere doesn't like Trump, okay? And it's like you started an unnecessary war, and we can't cut rates. We can't cut rates because of oil going up. But now we're finding out that Trump didn't approve the attack. It was Israel. So now Israel are going to be under attack now. People are going to go, we don't like Israel again. Oh my God, what a crazy world we live in. All right, there you go. You're starting to see it rebound now. I do think we've got an overreaction. I think the American economy is strong. The American businesses are strong, and I'm buying them, and I'm using my tax lots to trade and make profit. And I'm also using my tax incentives to be able to sell crypto when it's down, buy it back for lower, and benefit from a tax loss. Remember, be very careful. If you use that strategy, make sure it covers your expenses to sell it. Mine is now 0.15 because I'm selling lots of crypto all the time. I only learned of this strategy yesterday. It's a brand new strategy on the show, so I'm using it to its full extent. And as you can see, I'm going green now on XRP. Ethereum's probably going to go green, and I just managed to post that, buy it lower, and benefit from the tax. Use the benefit to buy the S&P on the way down. This is a very new strategy, only 24 hours old. I'm just refining it at the moment. So let's go to Q&A. Let's go to Q&A on the show, answer everyone's questions, and then we're getting ready for the ECB rate conference, which will be in just under half an hour. So Motto was here first. Sensei sent me, said William Myers. Good morning, everyone. Good morning, Moon. How are you? Jacko, good morning. Thank you, Jacko. I took Leah out last night, bought Leah a glass of wine, and I had a beer on your tip last night. You said go and get I think it was it not a tequila? What was it? It said, forget the name. Not a tequila, something else. Some great Mexican drink. I forget what it was now. But anyway, we did last night go out. Thank you so much, Jacko, for that. Smash the like button, he said. Great stuff. Ninja Cowboy is here. Good morning. Should be... I don't know what that means, says Raymond. Oh, quiet day. Should be a quiet day. Oh, no. No. There'll be lots of action today. He's got 6 minutes on the screen. I hope he doesn't get confused. What's that? I'm not confused. Good morning, banana heads. Oh, I see. With my trades going on. Sensei sent me. Good morning, everyone. Did you enjoy Whiskey Wednesday? A new show every Wednesday on Discord. We have a private chat. Oh, my God. Last night. How much fun was last night? There we go. We're coming up quick now, making money on my Ethereum. I just bought it lower, and I got a tax loss, and I'm up on XRP, and I used the money to buy the S&P, and the S&P is coming up as well. Fantastic. This is why we do it. This is why we're always here. Most people in financial circles now are turning off. They're going, oh, the markets are rubbish. They're down. This is when you make money. So Whiskey Wednesdays is a new thing every Wednesday on Discord. We talked about all sorts last night, didn't we? We talked about people oiling someone's feet up. We talked about a man in a truck. We had a right old laugh last night. Yes, we did. RB is here. RB, you missed Whiskey Wednesdays. It was amazing on Discord last night. We shared some really kind of weird secrets, which we shouldn't have done. But there we go. It was great. Special community. I certainly did. Jacko saw the trade. He saw the trade. Good morning, all. William Bond, our admin, our rock star for Discord is here. Good afternoon, Martin and everyone else. Scottish Pete. Yes, Melvin Yeo saw it as well. Yes, I sold Ethereum for a loss. This was taught to me and introduced to me by Mr. William Bond. I didn't know this existed. So guys, if you are doing it, there's some warnings here. Number one, check your crypto is included. It's in XRP and Ethereum, so it's in what I'm in, okay? Next, make sure if you're buying it on the way, you're selling it on the way down, you get back in again before it goes up. Otherwise, you miss the point of doing it. Number three, make sure it covers your trading. There we go. Look at that. Awesome. Now make sure it covers your expenses. Mine is now 0.15 because I trade a lot. I'm doing $500,000 of crypto a month, which gives me the best minimum cost. So it's remember all of that and remember why you're doing it. You're doing it to get a tax loss. So the profits that you make later in the year, they'll offset with the losses so you pay no taxes. So you'll have more money to invest. That's why you're doing it, number one. And number two, what are you doing with the money when you sell? Are you going to buy straight back? Remember that? Or are you doing it like I just did? I used the profit I gained from the tax loss to buy the dip on the S&P. So there's 3 or 4 parts to this, and you've got to get them all right instantly, simultaneously, and that is what happens when you do. It starts going up. It starts going in your favor. Look at that. Beautiful. I'm loving it, loving it, loving it. All right, we've got 20 minutes before the meeting starts. Good morning all. Good afternoon, Martin and everyone else. I did the live trade as we were doing the countdown on the show. Yes, Melvin Yeo saw it. Good afternoon, morning all. Bye, 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 bye. Said yes, morning, Mr. Bond. Getting more Coca-Cola. No, I'm now buying the S&P. What have I told everybody? And this is important. Please put in the chat right now. Please put in the chat so you all know to verify and fact check. What is my strategy? I've said to you, I sold the S&P at the top, went sideways, bought it back, and I'm buying individual stocks that can amplify the S&P. But what did I say to you when the S&P falls below 21 times earnings? What am I going to do? Answer in the chat. What am I going to do? This morning it was 20 times earnings. What am I going to do? Remember, can anyone remember? Please put in the chat. What did I say I would do when that happens? All right? Make the best of it while you can, says Scottish Pete. That's what Powell said. Strong economy. It is a strong economy. GDP is still moving up. It's surprising. The American economy is strong. This is an opportunity. This is Liberation Day Part 2. Liberation Day Part 1, I borrowed $500,000 and made 60 grand in like one day. All right? Let me show you that. The 1 year. Look at that. 61,000. We've lost about 30 of it in the last few weeks. Nearly 100 grand. We made 60 grand in Liberation Day. There it was. There was the Liberation Day right here. Now we're doing it again with $700,000. Absolutely right. We're doing it again. And because the balance sheets make sense, we're doing it. Don't you lose your tax lot information when you tax harvest like that? Yes, you do, but it doesn't matter. It's a whole reset. It's a whole repurchase. Yes, you lose the tax lots, but it doesn't matter. I've reset it. I've got a tax loss. It will go against my gains. I start again, and I bought it back cheaper, and I used the benefit to buy the S&P. So many of you are just saying buy, buy, buy. No, which is right. It is buy, but it's VU. I said to you, when we start getting the crash, whether it's a carry trade, which we're not getting today because Japan did not raise their rates last night. We were covering it, not live on the show, but we were covering it ourselves and sharing the information. There was no rate hike last night. There probably will be, and I've said September, October, that's when the real crash comes. There is no rate hike. So Japan, no carry trade today. No, what I said to you was I would buy back the S&P. So you're all right. Buy, buy, buy. A couple of people said VU. Yes, I now buy back the S&P. I don't need individual stocks. I'm buying back the S&P now. Okay, so there we go. I'm down 3% on Nvidia. I'm not buying Nvidia. I've got 100,000. I'm not buying Google. I've got 1/3 All right. I'm not buying Coca-Cola. I've got 100 grand of that, all paying dividends. Coca-Cola number 1, Google number 2, and a little tip from Nvidia, hardly anything at all. So I don't need to buy those. I am buying those by buying the S&P. Remember, when I buy the S&P, I'm buying about 6% of Google. I'm buying about 6-7% of Nvidia. I'm buying it anyway, but I'm broadening my perspective. That's why I'm now buying the S&P with the tax lot positions and the tax harvesting on my crypto. All right. Margaritas, that was it. Yes. Leah had a wine and I had a beer. Thank you so much indeed. Hi, everybody. Ready to go. Good morning, squad. Good morning, Zion. Current opinions on Coca-Cola. Goodbye. It's a great buy. It's a great buy. Why am I not buying any more? Because I've got enough and I'm diversifying now into the S&P where I'm still buying a little bit of it, right? But yes, if you're not in Coca-Cola, you can get a better price than I can. So yes, it's a great deal. Let's go, says Jacko, buying more XRP. Wow, I missed a lot last night. Yes, you did, Frank and Muff. It was crazy in Discord last night. Whiskey Wednesday. Every Wednesday after the show, it gets a bit weird. It does. It gets proper weird. Smelly feet. Oh, God. No. None of that. 1970 Buckley. Good morning, all. 10% correction coming. Wouldn't buy here. Hang on, Edeno. You'll miss it. We are now down, I think, about 7% from the peak of the S&P 500. We are now going into correction territory. It's already correcting. You sit on the sidelines, don't pivot in and out, you will miss it. 15 minutes to go for the EU presentation. We want that. You save on taxes this year, but you would pay more taxes next year since you have a lower tax base. No, it doesn't work that way. It doesn't work that way because if next year I don't sell because I don't need to sell, I can borrow against it, I won't pay any tax either. All right? So it's not like next year you're going to pay more tax because you didn't pay tax this year. It's the fact that you won't have to sell next year because you'll be up. That's the point. You bought the bottom. You deferred your profits from this year. Next year, you don't sell. You're up and up and up, living on the dividends. Just keep buying the dips. That's it. Coca-Cola is the piggy bank. That is correct. Time to buy. That's right. Vu, how do you do? That's right. Load up the truck. That's what I'm doing. Buy. Japan can change their rates at any time. Yes, they can. You're absolutely right. Of course they can. They can announce rates, so can the Fed. The Fed can come out today and say, we're raising rates. Of course they can. Anybody can, but not very likely. All right, I wouldn't rely on that. Limit order in for 140 on XRP for starters, trimmed at 155. Buy. Potato is here. How are you doing? Hello, everyone, says Tidy Big Dog. LOA, proper weird. Yeah. It was proper weird, if I'm honest. And David Hensley's doing the links. Morning later. Good morning, 1970 Buckley. All right, we got a star guest on the show. Let's read this out.
Adfink tipped €5.99 through Super Chat. Martin, I really appreciate that you take responsibility on days like these and thereby save us from panic selling.
Yeah. Well, what do you mean you take responsibility? What do you mean by that? I really appreciate that you take responsibility on days like these and thereby save us from panic selling. What exactly do you mean by that? I think I understand, but I'm not quite sure. Anyway, so let's get ready. The market's going to open in 1 minute. Let's cover it live, and then let's go to the EU live conference. Are you ready? Let's ring the bell. 1 minute.
So
here we go. The bell is ready.
A sign of whether the consumer is not in trouble or is. I thought that Macy's had great numbers yesterday. People didn't raise numbers. I thought that was surprising.
Yeah.
There are a series of numbers.
Ready to ring the bell.
that have
45
topped
seconds
out.
to
Even
go.
Costco seems like it's topped out. I'm betting that it hasn't topped out, but I would say that if you have something that's stick, Five Below, or if you have raw stores for good
We're now
pricing,
going
Boeing's
up on
good
our
pricing,
crypto.
TJ,
We did a tax
you're doing
loss.
incredibly well.
We
But
got
this
it
is
back
one to watch. This
cheaper.
is becoming
We
the
made
bellwether.
money.
Very
We bought the
strange, because
S&P
it
on the
wasn't
way
that long ago. They
down.
had a big
That's where
problem.
I'm going
They had a
now.
big change in management, and people
Here
thought
we
that
go.
maybe the concept was
20
a
seconds
loser
to go. We're
because
going to ring the
stuff
bell.
coming in more than $5, but that's the one to watch. That's now everybody's favorite.
Yeah, well, I know you got Signet tonight, which is actually having a nice pre-market.
Well, I've got to tell
10,
you, every single one
9,
of their flagships,
8,
their
7,
fleet was very, very
6,
strong.
5,
And JK is a
4,
remarkable
3,
manager. This company
2,
at one point was
1.
really just run like a porn shop. And now it's run like a jewelry shop. And they have extraordinarily good holiday season. They have to worry about pricing. But they
All
will-
right, the bell is gone. We're off. Let's see what's moving.
You know what?
We're still going down.
People don't believe in them. I think this is time to
Get a nice big another 2% drop in Ethereum and XRP. We'll buy it back on a loss and we'll post another loss. I'm loving it, loving it, loving it. The markets are red. We're going down now. Here we go. This is how you make money. You don't panic. You buy, you understand how the mechanics work, and you make money. Let's go, 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 go. Here we go. All right, let's go. So my overall portfolio is down $7,000 today. We're getting the market sell off. It's going to have an immediate bounce back. This weekend, Trump could say the war is over. Can you imagine if that happens? Can you imagine if that happens? Let me just fix this. Hang on, I pressed the wrong button. I've got, what the hell? Hang on a minute. I can't get rid of Jim Cramer. He's doing me head in.
Right now, you're gonna see a couple companies just really screaming, and the leader will be Cheniere.
Jim Cramer, get out of my screen. I can't get him off.
They actually started as an importer when we felt that we were going to be short natural gas. We have so much right now.
I see the battery went flat. The battery went flat on my foot switch. Oh, God. What a time for the battery to go flat. All right, let's go again. So, okay, here we go. We've had a nice little sell-off, and we're picking up. We've got the ECB in 12 minutes. Right, the S&P is falling. If we can get another big dip on our crypto, we'll do another 2% loss, and then we'll buy it back. But let's see, the S&P is still falling. Virgin Galactic's going down. This could go down now to $1. All right, could break the bank. Palantir is down. Gold is going down. That's because inflation risks. Amazon is going down. Look that this morning from Sensen, his newsletter. Very interesting stuff. Amazon going down. Apple going down. Enphase Energy still holding at 42. It's going to $100. Coca-Cola, my defensive play is shooting up. That's why you have a defensive play in this situation. We're going to earn dividends and we're going up. I'm loving it. What have I been teaching for ages? This is how you make money. This is how you stay in the game. I can trim now today with some lots and buy the S&P on the way down. I'm loving it, loving it, loving it. That's exactly what we want. That's exactly what we want and exactly what we predicted. J&J is up. Defensive is up. Chevron Oil is up. Tesla is going down. McDonald's, you need to be in both parts. You need to be in both parts. Google is going down. Microsoft is going down way more. It's too expensive. Meta is going down. Nvidia is going down. 177. Walmart is flat today. Tilray Brands has no value. It's worth $0. Robinhood is down on crypto. Vertical Aerospace going down. Joby Aviation going down. Archer Aviation going down. Bitcoin 69 going down, trying to rebound back. XRP on the way down, but we're still up on it. Ethereum is going down. Not worth selling for a loss yet. Not worth selling for a loss yet. It's just not worth it. Okay, we're holding that. Let's now go back to here. What a day it is. What a day it is. Can we make some more? Can we do some more? Ethereum is not worth selling yet for the position, but I can buy and sell it virtually for free now. But we've got to be careful. We've got to buy and sell it immediately. It's not quite there. Let's wait a minute. Right, let's see if we can take some tax lots on Coca-Cola and buy the S&P. So we're going to go live here now. Let me clear the screen. We've got 5 minutes before the ECB. If you're tuned in for the ECB, we're 5 minutes away. Let me now go into sell in tax lots. Let me make it clear on the screen for you. This could be a live trade on the show. Sell in tax lots. Have we got any profitable tax lots from yesterday? Right, let's go to the bottom. There we go. Right, we have this and this. Yes, we do. So we have 2 lots there. Right, that'll give us a profit. Now remember, we have already got the dividends. We've already got the dividends. We don't mind trimming Coca-Cola because we are overexposed now. We can take profit. This is why we bought the other side of the trade. This is why we bought a defensive play. So on days like today, we can make money. That's how you always win, right? You never have to lose. Let me show you here. There's Coca-Cola rising up. We have got $109,000. We've got our dividends. We don't need that much. This is why we bought on the way down. We don't need that much. All right, we're starting to get a bit of a trim on Coca-Cola now. We got these bottom lots. We can make ourselves boom, 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 boom. Review. Yes, it's a win. It's a win. Boom, take that win. Take that win. There we go. We just made some money. We made $20. Not a great deal. Not a huge amount of money, but we made money, right? We made money. We made $20. Not a huge amount. But what do? We go back over here to the S&P. We take our money. And we can buy another dip on the S&P with our profits. So let's go. Go into the S&P. Look at the S&P right now. It's a 603. 603. We're going to set a limit order now of 603. We're going to go like this. We're going to go buy. We're going to go buy. We're going to buy on the way down. We just made money from Coca-Cola. We got our dividends safe. Now we protect ourselves. 603. 603. We go limit order. Let's do this. Limit order. 603. 603. And we go 10 shares. How much can we buy? We buy 20 shares of the S&P. 20 shares. Yes, we can buy 20 shares. We've got 13 grand. Okay. 21 shares. 22 shares. 22 shares, 21 shares. I'm just doing my numbers. Okay, continue. 603. Here we go. We're going to get a new low now. Here we go. And we'll watch it on here. 602.89. It's falling down. We made profit from Coca-Cola. We're now buying the S&P back. This is exactly the strategy we've been talking about now for ages. Here we go. Review. And swipe up. Let's go. Come on. VU placed. Oh, damn it. Come on. I just missed it. Come on. Hold it. Come on. Oh, no, we just missed it. Tell me we didn't miss it. Oh, tell me we didn't miss it. I was trying to show you how to do it and I bloody missed it. Damn it. Come on, fall. Come on. We got it. 603. We got it. God, that was scary. I thought I was going to miss out on that. Okay, 603. We got it. Now we've got another $452. What we got now? So we got Ethereum and XRP starting to lose money. When they lose 2-3%, we'll sell them. We'll get a tax loss. We'll buy them back. We'll buy even better at a better price. We'll get a tax relief against these profits and we'll do it all over again. So we're watching Ethereum. We're watching XRP. We got 3 minutes before the ECB. Now what we want to do is the S&P is still down $400. Right, we go back over to VU. How do you do? And we watch it crash. Here we go. And what we're going to do now is buy with the cash that we've got. We've got $400. We'll buy that. 400. Whoops. Steady on mine. Go into dollars. $400. And we're going to buy that. And we're going to just buy it for cash. Boom. There's $400. We don't mind doing. Boom. Okay. Done. Now let's see what happens. We're going to be watching the ECB, and while we're watching the ECB, if Ethereum and XRP drop, If they drop 2% and they start to run down, I will sell them for a tax loss. I would get my immediate benefit to offset all my gains. I'll buy them back instantly. Remember, my spread is virtually free because I trade $500,000 a month, so it doesn't cost me any money to do that. So there we go. They're starting to go down, and our money is now going into the S&P. We have now got, thank you, Leah. Thank you very much indeed. We've now got $35,000 in the S&P. We've made money from Coca-Cola. We've trimmed and we're buying on the way down. This is how you always win. This is how you make money. Coca-Cola is now, you see, sold off. You see that? Rotation. So it's sold. We sold the top. We made 20 bucks, but we got like all that money back, about 14 grand, whatever it was, to be able to buy what we just bought. Fantastic. So now we're going to watch. All we got to do now is watch Ethereum and XRP. Nothing else. All right. We're not going to buy. We can't buy any more of the S&P. We're not going to sell any more Coca-Cola until it rallies again in rotation. OK, we're not buying any more Google and Nvidia. We don't need to. We've got enough. We're buying it now through the S&P. So we're broadening. OK, all we've got to do now is watch our crypto. And now if our crypto goes down another 2%, we'll sell it. We'll get the tax loss, we'll buy it straight back, we benefit from the difference, and we use that to buy the S&P. And we keep doing this until the market hits bottom, and then we are in and we ride it up. And then we go straight to $1 million live on the show. That is how you do that. Right, it's now time to go over to the press conference. We have got just a few moments to go. So I'm going to bring it up now on the screen. Let me make sure we are fully up to date. Let's make sure we're fully up to date. Right, let's speed that up. Yes. Okay, here we go. This is the ECB. We're going to watch this. This is important. It'll be live any moment now. So now we're watching this. We're watching our Ethereum fall. We're about to do it again, get another tax loss. The momentum is down. We cannot get it wrong. If we get it wrong and we sell on the way down and end up buying it on the way up, that's stupid. We can't do that. We've got to be really, really careful, okay? So we're watching Ethereum. It's down 0.8. I'm going to keep my eye on it. If it goes down 2%, and I think the direction is still downward, it can't turn up on me. It can't turn up on me. Otherwise, that wipes out the benefit, all right? I'm going to be very, very careful. Very, very careful. So let's just look very quickly at my crypto position. My crypto position now is I've got $58,000. So we've trimmed it a bit. But that's a lot of that is the value gone down. So we're not too worried. We've still got a good position. If we go back to our crypto, you can see our losses are racking up now, 12,300. So we're okay with that. Okay. Now we're making money on XRP and Ethereum is starting to rebound back. So we've got to be careful trying to buy it. The S&P is already bouncing back. So we're making money on that. So it's going to be a good day today. We could turn this market green. Okay, we're waiting for the EU. Woohoo! What a day it's been. Are you loving it? If you're loving this show, let me know. If you love to support live entertainment, live trading, we don't do this. We go live up to 12 hours a day. We're here to help people. If you love it, let me know on the screen. If everyone does a 99-cent super chat, you're supporting live TV and keeping it live. No AI, no bots. I'm with you all day, every day. All right, there we go. We're seeing Ethereum come back up now. So that was why I didn't start to sell it. I didn't go any more. It would have been crazy to chase it. We're going to get a rebound now. There it goes. I'm up on my Ethereum. I'm up on my XRP. I've banked my losses. I put money into the S&P. I was down like 1.5% on the S&P. Now just down 0.5%. This is great. Coca-Cola is just trimming and we made our money from it. So as far as I'm concerned, this is a winning day. Before the ECB starts, that was a winning lot, winning trade on Coca-Cola. So let me do that right now. Let me edit my text on the screen. 234 trades, 228 wins. We just won again. There it was. Oh, hang on. That one, and then I had a 200. I did a loss on Ethereum, didn't I? 235 trades, and we did a loss on Ethereum on purpose because of tax positions. There we go. There was the updated number. Right, ECB. Ethereum is coming up quickly. What a day it's been. Could everyone tap the like button? I cannot believe it. I put 1 minute on the clock before the ECB starts. 1 minute on the clock. There's 400 watching and everyone's asleep. This is not a show to be asleep. If you're asleep, go somewhere else. All right? You got 1 minute. We want 200 likes in 1 minute. Go. 200 likes in 1 minute. Let's go. Make some money. We've got our 100,000 plaque from YouTube. We've also got the verification tick. This channel is verified by YouTube as genuine and authentic. That is rare in the financial space. We are proud of that. We're now going to 500,000, and then we'll be the first channel in the world to 1 billion. That's what we want. That's why I work 12 hours a day to bring you this stuff. All right, so please tap the like button, get involved. If you've not yet subscribed, please do consider subscribing. We're waiting for the ECB. We're waiting for the conference. It's about to begin any second now. Do we have? There's Ethereum on the way up. Have we gained subscribers today? Let's have a look. 112. Yes, we have. 112, 278. Boom. Get in. I'm loving it, loving it, loving it. Okay, let's go back to the ECB conference. Have we got 100 likes yet? 124. 124 likes now. 124 likes. How long have we got before the ECB? Come on, folks. 124. There's 462 watching. I want 200 likes. The conference is about to begin. People are coming on the stage. Tap the like button. Come on, people. Get with it. Let's rock and roll and let's go to the ECB. Here we go. Rock and roll, folks. We're about to begin from the ECB. It's a big day, a huge day. You're bound to hear words around Trump's decision to go to war. It's bound to be all over the place. They would have cut rates today, but we decided to blow up things instead. All right, bloody mental, isn't it? Anyway, it's just awful what's going on. Trump will tell you everyone respects America, everyone loves America. They don't. No one around the world does, other than half America. Half America love him, half America hate him, the rest of the world can't wait for him to leave. That is the word I get from every politician, every news source that I get around the world. They cannot wait for Trump to leave and get back to a normal world again. Look at this. Look at this. The press going berserk this morning like they're rock stars. It's absolutely bonkers. All right?
I can't believe this.
Come on. Look at this.
A Jonola 310
The whole world is
has become
watching
a
the
member.
ECB conference this morning. Huge reaction to what we're going to get. We're waiting for the music to stop. The moment they stop the music, I'll bring it to you. They're just playing music. There we go. Take back that. The ECB is on the stage. They're just playing music. When they stop it, I'll bring it to you.
Good afternoon and welcome to our press conference with President Lagarde and Vice President de Guindos. My name is Wolfgang Preußel. As always, we have some participants who are connected via video. When they take the floor, I would ask them to turn on the camera and their microphones. And with that, I would like to hand over to President Lagarde, please.
Thank you very much and good day to all of you. The Vice President and I welcome you to our press conference. The Governing Council today decided to keep the 3 key ECB interest rates unchanged. We are determined to ensure that inflation stabilizes at our 2% target in the medium term. The war in the Middle East has made the outlook significantly more uncertain, creating upside risks for inflation and downside risk for economic growth. It will have a material impact on near-term inflation, through higher energy prices. Its medium-term implications will depend both on the intensity and duration of the conflict and how the energy prices affect consumer prices in the economy. We are well positioned to navigate this uncertainty. Inflation has been at around 2% target, longer-term inflation expectations are well anchored, and the economy has shown resilience over recent quarters. The incoming information in the period ahead will help us assess how the war will affect the inflation outlook and the risks surrounding it. We are closely monitoring the situation, and our data-dependent approach will help us set monetary policy as appropriate. The new ECB staff projections exceptionally incorporate information up to the 11th of March, a later cut-off date than usual. In the baseline, headline inflation is seen to average 2.6% in 2026, 2% in 2027, and 2.1% in 2028. Inflation has been revised up compared with the December projections, especially for 26. And this is because energy prices will be higher owing to the war in the Middle East. For inflation excluding energy and food, staff project an average of 2.3% in 26, 2.2% in 27, and 2.1% in 28. This is also higher than the path in the December projections, mainly owing to higher energy prices feeding into inflation, excluding energy and food. Staff expect economic growth to average 0.9% in 26, 1.3% in 27, and 1.4% in 28. This implies a downward revision, especially for 26, reflecting the global effects of the war on commodity markets, real incomes, and confidence. At the same time, low unemployment, solid private sector balance sheets, and public spending on defense and infrastructure should continue to underpin growth. In line with our monetary policy strategy commitment to incorporate risks and uncertainty into our decision-making, staff also assessed how the war in the Middle East could affect economic growth and inflation under some alternative illustrative scenarios. These scenarios will be published with the staff projections on our website. The scenario analysis suggests that a prolonged disruption in the supply of oil and gas would result in inflation being above and growth being below the baseline projection. The implications for medium-term inflation depend crucially on the magnitude of indirect and second-round effects of a stronger and more persistent energy shock. We will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. In particular, our interest rate decisions will be based on our assessment of the inflation outlook and the risks surrounding it, in light of the incoming economic and financial data, as well as the dynamics of underlying inflation and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. The decisions taken today are set out in a press release available on our website. So I will now outline in more detail how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. Looking at the economic activity, the economy grew by 0.2% in the fourth quarter of 2025, driven by stronger domestic demand. Households increased their spending as real income rose, and unemployment remained close to its historical low. Construction and housing renovation strengthened, and firms invested more, particularly in areas such as research and development, software and databases. Growth was no longer weighed down by net exports as it had been in the previous 2 quarters. It was underpinned mainly by services. Staff still see private consumption as the main driver of growth over the medium term. Investment should also continue to grow, with government spending more on defense and on infrastructure, and firms increasingly investing in new digital technologies. The external environment remains challenging, including in light of volatile global trade policies. The war in the Middle East is disrupting commodity markets and weighing on real incomes and confidence. This has led to a downward revision of consumption and investment in the baseline staff projections, especially for 2026. The impact would be even more pronounced in alternative scenarios with a more severe and prolonged energy shock. The Governing Council highlights the urgent need to strengthen the euro area economy while maintaining sound public finances. Any fiscal responses to the energy price shock should be temporary, targeted, and tailored. The current energy crisis underscores the imperative to further reduce dependence on fossil fuels. Completing the Savings and Investments Union is vital to fund innovation and support the green and digital transitions. The digital euro and tokenized wholesale central bank money will enhance Europe's strategic autonomy, competitiveness, and financial integration, and will boost innovation in payments. It is thus essential to swiftly adopt the regulation on the establishment of the digital euro. Simplifying and harmonizing rules across the EU's single market will help European firms grow faster. Looking now at inflation. So inflation rose to 1.9% in February from 1.7% in January. Energy prices were 3.1% lower than a year ago, after having been 4% lower in January. Food price inflation edged down to 2.5%. Inflation excluding energy and food increased to 2.4% in February from 2.2% in January. The increase reflected goods inflation rising to 0.7% from 0.4%, and services inflation moving up to 3.4% from 3.2%. Indicators of underlying inflation have changed little over recent months and remain consistent with our 2% medium-term target. Corporate profits recovered further in the fourth quarter of 25, while unit labor costs rose at a similar rate as in the previous quarter. Growth in compensation per employee slowed to 3.7% from 4% in the third quarter. Negotiated wage growth and forward-looking indicators such as the ECB wage tracker and surveys on wage expectations suggest that labor costs will ease further in the course of 2026, which should support the return of inflation to target. The increase in energy prices caused by the war will drive inflation above 2% in the near term. If persistent higher energy prices may lead to a broader increase in inflation through indirect and second-round effects, a situation which requires close monitoring, inflation expectations in the financial markets have moved up significantly over shorter horizons. Most measures of longer-term inflation expectations stand at around 2%, supporting the stabilization of inflation around our target. Let us now turn to our risk assessment. The risks to the growth outlook are tilted to the downside, especially in the near term. The war in the Middle East is a downside risk to the euro area economy, adding to the volatile global policy environment. A prolonged war could increase energy prices further and for longer than currently expected, and also weigh on confidence. These factors would erode incomes and make firms and households more reluctant to invest and spend. A worsening of global financial market sentiment could further dampen demand. Additional frictions in international trade could disrupt supply chains, reduce exports, and weaken consumption and investment. Other geopolitical tensions, in particular, Russia's unjustified war against Ukraine, remain a major source of uncertainty. By contrast, growth could turn out to be higher if the economic repercussions of the war in the Middle East proved to be more short-lived than currently expected. In addition, planned defense and infrastructure spending, reforms to enhance productivity, and euro area firms adopting new technologies may drive up growth by more than expected. New trade agreements and a deeper integration of the single market could also boost growth beyond current expectations. The risks to the inflation outlook are tilted to the upside, especially in the near term. A prolonged war in the Middle East could lead to a larger and longer-lasting upward shift in energy prices than currently expected, raising euro area inflation further. This could be reinforced and become more persistent if inflation expectations and wage growth were to rise in response, if the energy price increase were to spill over to non-energy inflation to a larger extent than assumed in the baseline, or if the war disrupted global supply chains more broadly. Ongoing trade tensions could also give rise to more fragmented global supply chains, curtail the supply of critical raw materials, and tighten capacity constraints in the euro area economy. By contrast, inflation could turn out to be lower if the economic repercussions of the war in the Middle East proved to be more short-lived, or if indirect and second-round effects proved less pronounced than currently expected. Inflation could also be lower if tariffs reduced demand for euro area exports by more than expected, and if countries with overcapacity increased further their exports to the euro area. More volatile and risk-averse financial markets could weigh on demand and thereby lower inflation as well. So looking at the financial and monetary conditions, the war in the Middle East has had a pronounced impact on global financial markets. Overall, financial conditions have tightened since our last meeting. Stock markets have fallen, and market interest rates in the euro area, especially short-term rates, have risen notably. In January, bank lending rates for firms and the cost of issuing market-based debt both remained at 3.6%, while the average interest rate on new mortgages edged up to 3.4%. Bank lending to firms grew by 2.8% on a yearly basis in January, down from 3% in December. However, this was offset by stronger issuance of corporate bonds, with the annual growth rate rising to 4% from 3.5% in December. Mortgage lending grew by 3%, unchanged from December. So in conclusion, the Governing Council today decided to keep the 3 key ECB interest rates unchanged. We are determined to ensure that inflation stabilizes at our 2% target in the medium term. We will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. Our interest rate decisions will be based on our assessment of the inflation outlook and the risks surrounding it, in light of the incoming economic and financial data, as well as the dynamics of underlying inflation and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. In any case, we stand ready to adjust all of our instruments within our mandate to ensure that inflation stabilizes sustainably at our medium-term target and to preserve the smooth functioning of monetary policy transmission. And we are now ready to take your questions.
And the first question goes to Annette Weisbach of CNBC. Annette, please.
Thank you very much. President Lagarde, I have two questions, obviously. So the first one is how the discussion went inside the Governing Council regarding the very uncertain outlook for monetary policy, whether you are all in one camp or whether there is perhaps a range of opinions. Second question is on the markets, because the markets are trying to understand how fast you're willing to act. You were quite fast in the projections already reflecting the changed situation, I would say. So is it the next meeting perhaps we're going to see action, and when the medium term obviously is a longer term, but when do you think it is time to act? Thank you.
Thank you very much for your two questions. Let me give you a little bit the ambiance and the process through which we went in the last couple of days. We had in-depth discussion on the current situation, and we are ever so grateful that our staff was able, at the risk of having zero weekend and very, very short nights, was able to provide us with a baseline and scenarios, the overall projection efforts, as at March the 11th. This is very unusual. And I'm specifically included in the monetary policy statement that this is exceptional. I don't wish to impose that exercise on a regular basis, but this was the information from which we could actually discuss in depth. We went a bit further than that, and we managed to make sure that the members of the Governing Council were extensively briefed by experts. We had a defense and military affairs professor who briefed us the day before the Governing Council meeting. And by the randomness of calendar scheduling, we also had a very good presentation of climate change impact on the ocean. And it's not unrelated in many ways. But it's totally random, I can assure you. So I think my goal and the goal of the Executive Board was to make sure that governors were starting from the best informed basis to hold their in-depth discussion. And I would characterize the overall mood of the group as being calm, being determined, and being laser focused on the information that we have, the projections that we received, and all data that can be analyzed and factored into our decision-making process. Our decision was unanimous. So you asked me about a range of views. There was no range of views. It was a unanimous decision that was taken not to move rates at all. We are going to continue doing what we have been doing, and that's addressing the second part of your question. We are starting from a good base. So I'm not saying that we are in a good place. We are well positioned. And actually you find that in the monetary policy statement. I think we are both well positioned and well equipped to deal with the development of a major shock that is unfolding. And we will continue doing that. You probably have heard me ad nauseum say, meeting by meeting, data dependent, no preset pace. And this was embedded in our strategy review of last July. But I'm so pleased that we finalized our agreement to operate on that basis, which is proving extremely helpful. Because at the time, we anticipated that we would be facing a succession of shocks, possibly in closed sequence. And this is what we are seeing at the moment. That's what we will do, which explains that I cannot give you a timeline, a date, but I can assure you that we will proceed on the basis of this analysis and on the basis of the hard work produced by staff to make sure that we have not only the baseline that you will see after this press conference because it will be published, but also the scenarios that you will also see after the press conference because it will also be on the website. Thank you.
Next question is for Balázs Korányi of Reuters. Balázs, please.
Good afternoon. Thanks for taking my questions. First one is about your reaction function. If you could explain that a little bit. What would trigger ECB action? Are you looking at expectations? Are you looking at core inflation? Is it wage growth that needs to move? What is it that would get the ECB to actually act? The second is, could you please preview the alternative scenarios for us? I'm curious about the adverse scenario. What does it look like? How high inflation goes? How long would it take to fall back? And how much of the energy shock would translate into core inflation?
Yeah. Okay. Well, I hope everybody else will be patient because I might take a little longer than I normally take, but I hope it informs all of you. So, as I said, we will continue to apply the 3 key principles that I have outlined. And being data dependent will lead us to look at everything that we normally look at. But we will be particularly attentive to a number of things. And that's, I think, the point in your question. We will be particularly attentive to developments in all commodity markets. We will be particularly attentive to supply bottlenecks. We will be particularly attentive to selling price expectations of firms. And, through the corporate telephone survey in particular and other surveys that we hold in of good value, we can assess how often price revisions will take place. That will be important. We will be particularly attentive to all demand indicators, be it PMIs, consumer confidence, etc. We will be particularly attentive to wage trackers. Because what we want to really come back to is these 3 key points that I have mentioned and that are also in the monetary policy statement. All of that which is unfolding at the moment, which is a severe shock, will depend on the duration, the intensity, and the propagation. And by propagation, I mean the indirect effects and the second round effects. And we need to have the best sensors and the best way to anticipate where these indirect effects and where these second round effects are going, if at all. That's what we will be attentive to. Now, I'm going to try to take you through a little bit to the scenarios, but I very strongly encourage you to look at the material that we will be releasing after this press conference, which will be far more detailed and informative. But essentially, the work that was done by staff is the following. Number one, they did a first baseline as at March 4th, which would have been normal exercise. And that will be available as well in what we publish later today. But that was very quickly superseded by the turn of events. So they did a second baseline as at March 11th. And that is the baseline that we hold as our baseline in our projections. And you will find, all the hypotheticals that are used there in terms of the price of oil, the price of gas, and the duration of the shock and the propagation. And there is a bit of propagation, actually. Some of it being judgmental, some indirect effects, some secondary effects as well. And then they produced 2 scenarios. One is the adverse scenario, and the other one is the severe scenario. Now you will ask me, what's the difference between the two? In the severe scenario, the price of oil and gas goes significantly up and higher than in the baseline, but it falls back to March 4th baseline pretty much at the end of our projection horizon. On the other hand, the severe one, it goes up as well, a little higher than in the adverse, but it doesn't fall back very fast. So it stays high for a longer period of time.
Awesome.
And it settles at March 4th baseline beyond the end of our projection horizon. That's one of the key differences. And obviously, given the hypotheses that are taken, the impact on inflation, on growth, are different and are higher on inflation and lower on growth. But I'm not going to give you, the year-by-year details of those consequences. You will find that in the scenarios. But it's a significant difference.
Next question goes to Jana Rando of Bloomberg. Jana, please.
Good afternoon. Two questions. How are the lessons of the 2022 inflation shock informing your approach to the current crisis? You've said in the run-up to the meeting that you won't allow the same kind of inflation to materialize again. So I'm wondering whether your threshold is lower than in the past and potentially also a bit closer. That would be my first question. And the second one relates to the core inflation projections. I noticed that they are above 2%, not much, but they are above 2% throughout the forecast horizon. And I'm wondering if those are all ready second round effects. And more generally, I would be interested in how you feel about those projections in relation to your mandate. Thank you.
I feel very proud of our staff, that I can assure you. Because I don't think that there are many other central banks that have had the courage to try to, cut off at March 11th and produce the set of data that we have had available. That's how I feel. So, from 2022 to now, 4 years later, I would characterize our current position as, I would have two characteristics. One is, I think we are well positioned, and I would call it the 3 times 2. 2% inflation at around target medium term, 2% medium term inflation expectations, and 2% interest rates. So target, broadly neutral. That leads me to say that we start from a good position, and we are well positioned.
Please
to
tap the like and consider subscribing. It helps the channel enormously. Thank you.
Apply our strategy and to be agile, to do what is necessary, because second point, we are determined to ensure that inflation stabilizes at 2% medium term. This is our commitment. When I say also that we are well equipped, I think that, in those 4 years, we have learned, we have improved our models, we have changed our strategy, and we are now in particular more attentive to risks around the outlook. We are developing scenarios, sensitivity analysis to make sure that we are, as well informed as possible in order to assess the situation. So I would say that this enables us to better understand and better make our determination. I think we also understand better the mechanism of the pass-through into indirect and second round effects. So on your second question, as I said, I'm proud of the projections that have been delivered. Granted, on core, we are at 2.1 in 2028. You have to remember that we include in that ETS2 applying as of 28, and you still have a little bit of remaining of the base effect and a little bit of second round.
The next question goes to Elisa Piazza of CNBC, Class CNBC. Elisa, please.
Thank you for taking my question. So, my first question is, how concerned is the ECB about private credit in the US? So, do you see potential contagion risks in the broader financial system, so in Europe as well? And my second question is about the European Commission that is considering a review of EU merger rules to encourage cross-border consolidation, including in the banking system, while national authorities continue to pose obstacles, to such transactions. So, what's the ECB's view on this? I'm not making names.
Well, thank you for being so discreet about names, but you also give me a chance to offer the floor to my vice president, whom I'm so grateful.
Well, good afternoon. If you look at our recent financial stability reports, we have been dealing with private credit quite a lot, and we have paid a lot of attention to private credit and the potential risks that private credit and private equity, private markets in general, have posed for financial stability. And the exposure in Europe of private credit and private markets in general is much more limited than in the US. Nevertheless, we have seen that the market is growing, and these kind of activities are exponentially growing in recently and lately. What are the main problems that we have identified here and that we have indicated in our previous reports? The first one is opacity. Lack of transparency. There are some difficulties in order to know, the valuations of the assets that they have in their portfolios. And even lately, you have seen that some of them, they have started to incorporate what they call continuation funds. It's an indication that there were some problems in terms of, the liquidity and the valuation of these assets. There is another issue that we have paid a lot of attention that is quite opaque, that there is no transparency. That is the leverage of these kind of instruments. And finally, we have seen as well that there are, in the case of some private credit funds, they have started to limit redemptions and to impose what they call gates. This is an indication of all the problems that I have indicated before, that I have signaled before. And, it's a clear indication that, there are liquidity mismatches in this kind of funds. The interconnection with, the banks and the non-banks is something that we have analyzed quite in detail. As I have said before, in the case of Europe, it's much more limited, the exposure to these kind of instruments. But, it's something that we are following closely. And for sure that what is happening in the US could be, a sort of leading indicator. Nevertheless, I repeat again that exposure in Europe is much more limited of the European banks to this kind of instruments. So it deserves and it merits attention. I think that we need, much more transparency with respect to the operations of this kind of instruments. And, the links and the interconnections with the banks is something that, for sure that the SSM is looking very carefully.
And, we are always keen to see the work produced by the Commission. We know that the 28th regime was released yesterday. We're going to look at it carefully. Obviously, on the state aid and on the encouragement of mergers, we will be looking at that also attentively, including in the banking sector.
Next question goes to Henrike Adamson of the German weekly Wirtschaftswoche. Henrike, please.
Thank you for taking my question. So just coming back to core inflation again, you've said that you've better understood the mechanisms, how energy prices translate into second round effects. Could you maybe expand more on that and how it has maybe structurally changed, because before oil price increases maybe haven't had such a big effect on core inflation before, and after 2022 maybe it's different now. Just the effect on the core inflation. Thank you.
Well, thank you for your question. We're back to difference with 2022. I think another point that we have to keep in mind is that back in 2022, when the shock hit, inflation was already at 6%. So that's a big difference with where we are at the moment, where latest reading was 1.9, and we had inflation at target in the medium term. So that's a major difference. I think the labor market is also quite a bit different. And I'm not saying that to avoid your question, but I think all this actually matters. And the fact that we have a labor market which is, solid, but not as hot as it was back in 22, where we had, shortages of labor and a different bargaining position, will also play a role. Caveat, though, inflation expectations have a lot to do with the memory that corporates have of inflation.
At Tidy Big Dog,
and back in 22, the memory was
£1.99
dating way back.
Chat. We all stand
now
together.
the memory is rather fresh because people have seen inflation. So the reaction function that they will have in terms of investment, in terms of wages negotiations, in terms of consumption, that is going to be informed by fresher memory of inflation that went high and that we managed to bring back to 2%. I think the third element, which is different as well and that we will have to be attentive to, is that while it was a major supply shock to begin with, in 22 we had the pent-up demand and a demand shock element about the situation that we faced. Now, there's one thing that I want to mention, because I'm going to have to run, I'm sorry to say, because I need to catch a plane to go to Brussels, because I have to be there at around 5:30. When you look at the scenario analysis that will be published later on, don't forget to keep in mind that our scenario work does not factor in any monetary policy measures. So the numbers that you will see are without monetary policy, whereas the baseline includes what is anticipated by markets as at the cutoff date. So that's a big difference before you jump to conclusions. So I wanted to just mention that before I say goodbye and see you on the 30th of April, another time.
Bye-bye.
There we go. The conference is now ended. Let's wrap this up and let me just end that there. So, what a morning it's been. It's been a winning morning for investors, traders, long-term investors. It's a winning morning. What we're learning from economies and institutions around the world is, in fact, generally speaking, things are moving in the right direction. However, Trump is creating chaos with all this, you could argue, unnecessary wars and all the rest of it. But as investors, I think it's providing us opportunity. If you know how the mechanics works, know how the tools work, you can take advantage of it. Well, we've been doing it all morning. We sold our Ethereum this morning for a tax loss. That will go against my gains this year. Bought it right back. If it goes down another 2%, I will do it again. Now, I can get the best deals on Robinhood because I trade now $500,000 on XR on crypto a month. That gives me every 30 days. That gives me the 0.15 spread. So it costs me nothing really in spreads and fees to do it. So it makes sense, and I'll just keep buying more. Selling as a tax loss, buy it back immediately. You can't do that with all crypto, and you can't do that with stocks. That's 30 days. Wash rule. That's what I'm doing. Then I'm using the benefits to buy the S&P. So you saw me this morning trim Coca-Cola using my tax lots. This morning I sold, made about $20, not a huge amount, but I'm already in with the dividends of those lower lots. You saw me do that live on the show. Took that profit. I gave it at about, $12,000 back. Only $20 profit, but a profit nevertheless. Use that money to buy far greater gains now with VU. Eventually, all my money from profits and gains and tax losses and everything else will end up back where it started, in VU. I'll have more money in a broader index for when the market will recover. This way, I will get the bottom of the market. I will always be invested. I won't pay tax on my gains, and this is how to win. Right now, we're going to go over to Discord and we're going to do one-on-one live Q&A. You can speak to me directly. We're going to have a video call in and we're going to break down the trades, what I'm expecting next. I'm going to give you all my trades ahead of time. And you can ask me anything you want. You can join me on camera or not. You can be phoning in or not, or just text me directly live. Ask me anything you want. We're going to break it all down on Discord. We'll be live in Discord in half an hour. On the hour, we'll be live in Discord. If you want to join me, you've got time to join me now. All my trades 24/7. There is Discord, 90% discount. It's only a couple of bucks a month. I will tell you the base entry of $2.99 is just a couple of bucks, but everyone now is going pro. The reason for that is we've given you a much better service with much more stuff, 24 hours a day contact with me, all of my trades, 2-stage events a day rather than just one a week on the Monday, and not just the day trade events, but the 24-hour trade events, plus all the other things. We've got our own casino, our game channel, we give away Luca coins, all kinds of stuff. Everyone is now upgrading to the pro. It's just literally pretty much everyone who comes in goes pro. So consider that. But if you want the entry level and you want to be able to talk to everybody on the service, it's just a couple of bucks. We could charge $1,000 a month for the service. Everyone has said that. But the reason we don't is because I make money consistently from investing, and because of that, I then give you my services for near nothing. This is my position now. Look. See how it's growing? $484,000 in stocks. I've now got about 700 grand invested in total with my crypto, my Roth IRA and my margin. So we're building up to that $1 million live on the show. But right now when the markets are down and scary, we're not selling, we're buying, we're pivoting, we're using the tools of our trade. There we go. Ethereum is going down. Here we go. This could be another tax loss and buy back more. Are we going to do it live on the show? Let's watch it. Let's watch it. What we're going to do now is send you Order Extra, which is a replay of today's events, so you won't miss anything. Let me pin this to the top. Are we getting a rundown? Got to be careful how you do this live now on Extra. That's where we're going next. Okay, I'll do that again. It'll automatically take you there. We want to see about 2%. A 2% drop. On XRP is holding great. I mean, it's doing great. But Ethereum is dropping again. If we get 2%, we will sell it all. We'll buy it back immediately. Remember, if you buy it back on the way up, you've missed the benefit of the tax loss, so be careful. But if we can go another 2%, if we get 2% down, I will sell it. I'll buy it back straight away. It will post as a loss to defer what I make this year on my gains. And I will use the money to buy back in, and the benefit I get, I will use to buy VU if it's going down, and it's not. VU is coming back up again now, so I will just simply buy back Ethereum at the same price. If I think it's going to keep going down, I'll hold, but I am happy we're going to bounce from here, so I'll just buy back at the same price. And remember, you can only do that if you are getting the minimum cost, if not free, to trade. Remember that. That's it. Very, very important. You've got to make sure that you stay on the winning side of it. That's why you have to get at least a 2% drop to do it. Otherwise, it's kind of pointless. All right? So we're going to wait for that 2% marker to kick in. And if it does, I'll be live on Discord in 28 minutes and we can discuss it live. But for now, I'm going to end my show. I hope you've enjoyed it. We've been trimming, repositioning a lot today. Let me go to live Q&A. Let me just switch to members only. We'll do live Q&A for everybody. Just bear with me. So these are the benefits of being a YouTube member. Let me switch over to members only. I'm going to be back with an Electrum event shortly. An Electrum event today doing your stock analysis. It will be a members event. Go to Electrum. All members will benefit. Then Electrum members will benefit. So there'll be some free stock analysis today for my members. All right, well, you can choose a stock and I will do it for you. That's coming up after my Discord event. I've got to do my Discord debrief first, then I'll be back with that as promised yesterday. So if you've got a comment or a question, If you've got a comment or a question, please repeat it now and I will answer it for you. Members only. Thank you, says Rich. You are very, very welcome. You guys should take full advantage to call and ask questions. Wish I could. I'm at work or I would. Thank you, David Hensley. That's very kind of you. Well, they can in a moment on Discord. And then when we come back for our Lectrum event, we can do that as well. So thank you very much. We've got some false information being sent in by non-members. Ignore that. We've got all sorts of people saying silly things. It's just the fan club of XRP. We are investors. We make money on XRP. We don't just join a fan club and predict the future and all that kind of stuff. Ignore all that. Talking absolute rubbish. War is not what USA wants, says Defense. Fuel is the biggest driver of inflation. It is. Iran knows Trump's war is unpopular with the USA. Globally, I meant. It is. Yes, it's unpopular everywhere. I don't know if anyone thinks it's a good idea. There's no evidence that Iran was about to release nuclear weapons on anybody. And then a few weeks earlier, remember, Trump said he blew it all up anyway. So the whole thing is just so ridiculous. I don't understand any of it. Other than to drive the market down. You think gas will go even higher on the market? Yes, of course it will. We could go to $200 a barrel. And I think that's what Trump wants. Send it absolutely sky high. The markets all rocket and plummet. He buys it back himself. They make a load of money. Then he says the war's over, and then they just walk away with a mess. And then everybody gets rich. I mean, it's absolutely insane, but that's what's happening. It's so obvious, and that's why I'm in the market, and that's why I'm buying it, and so on. All right. Okay, we didn't get any more comments and questions, so I'm going to end this. Send you all now to Extra. Thank you very much indeed. I gave you the links in the chat. Let me give it to you again now, live now on Extra. I'll onboard all my Discordians for our onboard event in a moment, answering Q&A as well. Replace the pin. There you go. It'll automatically take you there. I'll see you on Discord on the hour. Then I'll be back with a YouTube event for members only, doing your stock analysis. You can ask me to do an analysis for you. I will do it. I'll put out its own video. It will promote the stock. So if there's something you care about, something that you want to trend on YouTube, I can make that happen. We can make it rank #1. Your stock will be seen by more people. You will get the analysis you want, and that's delivered to our members coming up shortly. Jesse just said, if the good people of Iran get a better free country, it's all worth it. Well, yeah, I guess. I mean, there's no doubt about it. Regime change is not a bad thing. The regime, it is bad and was bad in Iran, but just blowing up oil fields, that's ridiculous. Israel have gone absolutely bonkers. So anyway, cheers for the show, Martin. Scottish Pete, you are welcome. Thanks for the live, says Defense. That's it from me. Join me now on Extra, a replay of today's events. You can, all countries around the world tune in at different times. So you want to tune in for that. You can chat live if you're a member. It's only 99 cents. That's all it took to keep the bots out, which is perfect. And then we'll be back on Discord in about 20 minutes. And then I'll be back with a members event for those that want some free analysis. All right. That's it from me. The link's at the top to go to Extra. I'll see you there and on Discord in 20 minutes. Take care of yourselves and each other.